There are many potential multi-baggers still undervalued in PSU sector. Today we are going to discuss the top 7 undervalued PSU stocks to invest. Anticipation of political stability, especially with the expectations of a BJP victory in the upcoming elections, has boosted the confidence in business policies and increased optimism among investors. Due to the ongoing investment plans, growth plans, and consistent orders along with a stable government, analysts expect the PSU stocks to keep rising after the elections. So why you should invest in the PSU stocks? Many PSU stocks were heavily undervalued and gave good return the past year. PSUs are often considered more stable and secure compared to the private companies. They are backed by the government, providing a sense of reliability and security to the investors. PSUs operate in core sectors are crucial for the overall development and growth of the economy. PSU stocks may trade at a relatively lower valuations compared to their private sector counterparts. This can present value investing opportunities for those looking for undervalued stocks. PSUs are integral to the country's infrastructure and economic development. As the economy grows, these stocks also grow, leading to a higher long-term returns. I've noticed that many of you are watching my channel but have not subscribed to the channel. So please do subscribe and support. To move forward, I need the support from all of my viewers. Also, the recent videos are not getting much reach and the YouTube algorithm seems to not show my videos as before. So if you like my videos, so please like my videos and give comments under the video so the YouTube algorithm shows my videos to more people. Also share my videos with your friends and family and anyone who might be interested. The first stock is a PSU under the Ministry of Petroleum and Natural Gas. It operates 3 refineries in India with a total capacity of 35.3 million metric tons per annum. This stock is India's second largest government-owned oil producer. This stock is a crucial player in the Indian oil industry. This company accounts for about 14 to 15% of India's total refining capacity. The market cap of the stock is 1,28,561 crores. The stock I am talking about is Bharat Petroleum Corporation. In terms of revenue, the BPCL's main products are: first is high-speed diesel, which accounts for 52% of its revenue. The second one is motor spirit, which accounts for 23.4% of its revenue. The third one is liquefied petroleum gas or LPG, which accounts for 11.3% of its revenue. So BPCL has a strong presence across its value chain. Let's look at the retail or petroleum. They have 82 retail depots and nearly 20,000 retail depots across India, which has a 26% market share. When looking at the LPG, there are 54 LPG bottling plants and a base of 9 crore customers, which holds for 27% of the market share. Looking at the aviation, it has 56 aviation service stations across Indian airports with a 21% market share in the aviation turbine fuel. Looking at the lubricants, it is selling more than 400 grades of lubricant products under the MAK Lubricants brand, serving 18,000 customers with a market share of 25%. When looking at gas, a customer base of around 55 major LNG customers conducted through its subsidiary Bharat Gas Resources Limited. In recent news, the Noida International Airport partners with BPCL for an eco-friendly fuel pipeline. This deal aims to construct a special pipeline for aviation turbine fuel. The current stock price is 603 rupees and price to earnings ratio is 4.44, lower than its sector PE ratio of 14.41. Debt to equity ratio is lower than 1. The return on equity for the last financial year was 38.75%. Analysts have given a 59% buy rating for the stock. The 52-week high of the stock is 687 rupees, so the current stock price would be a good entry point. Global brokerage firm Jefferies has upgraded BPCL to a target price of 890 rupees per share. The next stock is a government-owned coal producer in the world. This is a PSU stock under the Ministry of Coal. This stock holds a significant market share, contributing around 80% of the nation's entire coal output. The market cap of the stock is 2,79,233 crores. The stock I am talking about is Coal India. Coal India Limited is primarily engaged in the mining and production of coal. This company operates numerous coal mines across India and is one of the largest coal producing companies globally. Coal India Limited also operates coal washeries, which are facilities for washing coal to remove impurities, ensuring a higher quality product for various industries. The company serves as a major supplier of coal to various sectors, with its primary customers being the power and steel industries. Other sectors that rely on Coal India Limited products include cement, fertilizers, brick kilns, and several other industries that utilize coal as a fuel or raw material in their process. Coal India is involved in infrastructure projects aimed at enhancing the coal transportation and loading systems, such as the first mile connectivity projects. This company is also actively expanding its footprint in renewable energy by venturing into solar power projects with ambitious targets to increase its renewable energy capacity. The Coal India plays a crucial role in India's energy sector by mining and supplying coal to meet the demands of various industries. Coal India will be one of the beneficiaries of India's growing power requirement. Coal India is a pure play coal mining company, but the government is trying to reduce the carbon emissions. So I wouldn't consider this stock for long term, but for the short term, this would be good stock. The current stock price is 441 rupees. The price to earnings ratio is 9.51, lower than the sector peer ratio of 13.18. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 40.27%. Analysts have given 73% buy rating for the stock. 52-week high of the stock is 487 rupees. Next stock is one of the largest steel producer in India. This stock is primarily involved in the production and sale of iron and steel products. It operates 5 integrated steel plants and 3 special steel plants strategically located in the eastern and central regions of India near the sources of raw materials. The market cap of the stock is 61,669 crores. The stock I'm talking about is Steel Authority of India. SAIL operates and owns 5 integrated steel plants. SAIL manufactures various grades of steel, catering to a wide range of industries such as construction, infrastructure, automotive, machinery, and appliances. This stock focuses on producing value-added steel products which command higher margins and cater to specialized applications. While the majority of its operations are in India, SAIL also engages in international business. According to a recent survey, SAIL is one of India's fastest growing PSU. In recent news, Indian Railways has awarded steel procurement orders for 1,586 crores and SAIL emerged as the top beneficiary. The current price of the stock is 144 rupees. Price to earnings ratio is 19.88, higher than the sector peer ratio of 19.44. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 5.75%. Analysts have given 43% buy rating for the stock. 52-week high of the stock is 157 rupees. The next stock we are going to discuss finances and promotes power projects across India. This PSU stock provides loans to central state power utilities in the country. This stock comes under the Ministry of Power. This stock also offers loan products for financing renewable energy projects. The market cap of the stock is 1,13,057 crores. The stock I am talking about is REC Limited. REC covers the entire spectrum of power infrastructure development in India. They provide loans for setting up power generating stations, be it conventional or renewable energy sources. They also facilitate the transmission of power from these stations and enhancement of the existing transmission systems. This stock is the first Indian PSU to raise funds through green bonds listed on the London Stock Exchange in the national securities market. From metro system to highway, port, waterways and steel infrastructure, they are enabling the backbone of India's development. The government's vision for power sector development gives a big boost to the stock. The current stock price is 430 rupees. The price to earnings ratio is 8.61, lower than sector P ratio of 19.22. Debt to equity ratio is higher than 1. Return on equity for the last financial year was 20.11%. Analyst has given a 83% buy rating for the stock. 52-week high of the stock is 524 rupees. So the current stock price would be a good entry point. The next stock from our list is a leader in India's trading, e-commerce and scrap recovery sectors. This stock is owned and controlled by the government of India. This company acts as a facilitator for raw material procurement. This stock plays a vital role for secondary steel producers and petrochemical industry. The market cap of the stock is 6,085 crores. The stock I am talking about is MSTC Limited. MSTC plays a vital role for secondary steel producers and petrochemical industry. This stock's trading and marketing business accounts for approximately 37% of its revenue. The company engages in both import and domestic sourcing of bulk industrial raw materials, including heavy melting scrap, low ash metallurgical coke, HR coil and more. Another substantial segment is the scrap recovery business, constituting around 37% of the revenue. MSTC operates in this field through its subsidiary and joint ventures. It has secured agreements with key private sector players like Reliance, Indus Towers, Tata Power and Vedanta. The current stock price is 874 rupees. Price to earnings ratio is 26.13, lower than the sector P ratio of 118.48. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 25.71%. 52-week high of the stock is 1,165 rupees. So the current stock price would be a good entry point. The next stock is the largest producer of iron ore in India. This stock has been a major player in the exploration and production of iron ore, diamond, sponge iron and wind power. This stock has been consistently profitable and has positioned itself as a leader among government stocks. This stock holds the title of the largest iron ore manufacturer in India, contributing to 18% of the domestic production. The market cap of the stock is 70,452 crores. The stock I am talking about is NMDC Limited. Supreme Court gave a favorable court order allowing private sale of iron ore in Karnataka, benefiting NMDC. This is crucial as NMDC operates 2 mines in the state with a peak rate capacity of 14 million metric tons per annum. NMDC operates 7 iron ore mines across India. Beyond the iron ore mine, NMDC operates India's only mechanized diamond mine and has ventured into coal mining in Jharkhand. The company has a global presence with partnerships in Legacy Iron Ore Limited in Australia and Coal Ventures in Mozambique. NMDC is a leading agency in natural resource exploration, allocating funds for research and development. With a vision to become one of the world's low-cost iron producer, NMDC has ventured into steel making. Vision 2025 aims to enhance the iron ore production capacity to 67 MTPA. Recently, NMDC's major iron ore mines delivered the highest ever annual production in the company's history. In FY24, NMDC produced 45 million tons of iron ore, which is 10.49% year-on-year increase from FY23. The current stock price is 240 rupees. Price to earnings ratio is 10.95, lower than sector P ratio of 13.18. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 20.44%. Analyst has given 82% buy rating for the stock. 52-week high of the stock is 252 rupees. The next stock is a powerhouse of India's electric power transmission. This stock is the largest electric power transmission company in India. This stock is a key player in moving large blocks of power from central generating agencies to load centers. This stock operates under administrative control of Ministry of Power. This company executes critical projects assigned by the government, ensuring the development of India's power infrastructure. The market cap of the stock is 2,55,162 crores. The stock I am talking about is Power Grid Corporation. This stock is also leading the charge towards e-mobility with its EV charging infrastructure initiative. From setting up fast EV charging stations to promoting electric vehicles for its own fleet, Power Grid is driving the future of transportation. The company's revenue breakdown showcases its dominance in transmission, contributing 89% of its revenue, followed by consultancy and telecom services. This company serves over 150 domestic clients and operates in 21 countries globally. The current stock price is 274 rupees. The price to earnings ratio is 16.22, lower than the sector P ratio of 22.73. Debt to equity ratio is higher than 1. Return on equity for the last financial year was 17.66%. Analysts have given 60% buy rating for the stock. 52-week high of the stock is 298 rupees. Goldman Sachs remains positive on the stock. If you haven't subscribed to my channel yet, please do subscribe. If you like this video, also watch my video on best solar stocks to buy now.